What's up guys, Russell here. If you're new to the channel, make sure you subscribe. I do a ton of stock alert service reviews. Make sure that you don't buy one that maybe you'd regret. I look at investment newsletters and also options trading alert services. So make sure you hit subscribe if you want to be updated whenever I do another one of those, and it's pretty much daily, at least for the time being. So today I want to talk a little bit about the market. It's been pretty horrendous recently, as anybody who's been actively trading knows. The volatility's bad. It's also pulling back to support. So we're not actually in a bear market yet. Everybody thinks we are. People are freaking out, selling stuff. If you look at the SPY, so this is a SPY on the daily chart, you can see that, you know, for the last year we basically get these pullbacks to the 50-day moving average, the blue line, and it went on a tear. The problem is nobody was making money. At least very few people that were trading penny stocks were making money on this sort of massive move up. There's multiple different reasons for that, many of which I don't really know, but needless to say, this is not a bear market, right? So a lot of people are saying, oh, the market's going down, but not really. So it was flattening out here. So then we had a pullback down to the 50 moving average and a failed attempt, and now we're back down at 408, right on the moving average. So this is a totally key level. If this closes below this repeatedly, then we could well be in bear market territory, right? If we look at the yearly, so move this to 1 year, everybody's like freaking out because the market pulled back a little bit. Sometimes it helps to put things into perspective, right, and put it on a yearly chart. So you can see the trend has been upwards for a long time. But you do get these pullbacks, right? And sometimes they do break the moving average and then recover and continue up. So really, we're still totally in this channel, albeit at the bottom of it. But even if it breaks down to this sort of level, it's not like the sky is falling, right? We could be in a dip. Who knows? But the market's actually pretty good at the moment, even though well, not everybody, but a lot of people I know are struggling. So that's kind of like an overview. But what do we do if the market does go into a bear market? A lot of people that have started trading last year or in the last few years have never experienced a bear market. It's, you know, this bull market's been going on for a decade. It's bound to change to a bear market at some point. So this is just a case of when, not really if. So I figured I'd just do a quick summary of 7 ways that you can make money in a bear market. For experienced traders, there's nothing really new here. For new traders, you might get a little golden nugget. Who knows? So keep watching as I go through these different ways. By the way, for new traders that don't know, a bear market is just named after the bear, right, which swipes downwards to attack. So that's why it's the use of a bear. A lot of people don't even realize that, but that's basically this downwards motion of its paws signals a downwards price action. And the opposite is true for the bull, who puts its head down and thrusts upwards to attack, and that's why it's called a bull market. It's amazing how many people don't really give it much thought. Anyway, the number one thing I've found to be useful when the market is going down or is in a bear market is to reduce your exposure. So the worst thing you can do is be holding a bunch of stocks that are really affected by the market sinking and becoming a long-term bag holder as the market just goes down and down and down, pulling your stocks with them. So recently that would have been like the tech stocks, or at the moment maybe even Tesla. As bad news has hammered that down, you can be left holding the bag. So you certainly don't want to be buying stocks or calls and holding them for long periods of time at this point, unless you plan to ride them out over a long period, like years. Then you might be okay. But what I do, and I know a lot of good traders do this, is they reduce their exposure to the market by only taking small positions and basically only holding for intraday. So maybe a few minutes to a few hours. Not letting any of the big market drops spook them. Kind of, you know, it's just a good way to trade in a bad market. You just capitalize on things that are moving based on something other than the market, right? So finding stocks that are green on a red day. So it's a catalyst. If a good bit of news comes out for a company, the stocks will spike regardless of what the market's doing usually. Maybe it'll be dampened a little bit depending on the stock. But if a biotech is FDA approved, for example, that thing's going to spike. Doesn't matter if the SPY is struggling. So there's definitely individual stocks that you can find even in a bad market or a bear market that actually will still move up extremely fast and give you great runs. The market overall doesn't dictate some of these smaller stocks. So, for example, here you look for hot sectors, right? So last year was the coronavirus vaccines and test kits, and you could have horrendous market pullbacks, and these companies actually operated inversely, right? Because the fear of the coronavirus was causing the market to pull back, and then everybody basically piled into coronavirus stocks. So you'd get these huge movers that were just totally puffed up, but you could still find stocks to go long on, even on market pullbacks or a bear market. So this is an example INO. I'll leave a link in the description to this article if you want to go through and read it more carefully as well. So the number one thing, that you really have to always have in the back of your mind when you're trading is to honor your stop losses, and that is particularly important in a bear market. So if you don't honor your stop losses, I guarantee you at some point you're going to be holding a bag 50% down for months. It could even stop you from trading just because you've got so much capital tied up in that losing position and you're refusing to sell it. So you want to set an order, preferably like on a stock, only a few percent, maybe up to 10%. But if you're day trading, only a few percent usually, and it of course is up to you for your own particular strategy and risk reward settings basically. So one of the best ways in a bear market or a down market is to short stocks that are scams. They'll go extra down, right? They've got that extra momentum behind them. So if they're, breaking lines of support and RSI's turning down and there's a hit piece on it from Seeking Alpha about how this is a scam or whatever, something like the Hindenburg newsletter that comes out, you'll really see these fall apart in a bad market. So Tim Sykes has capitalized on this for years. He's made a fortune doing it and betting against them. Some people don't like going short, but I have a video on how to go short, and at times I want to tell people about shorting is not an ethical thing, right? It's not, oh, you're going short in that company, how dare you? That's a bad thing. Some people even say it should be illegal. But in a bad market, your shorts basically add value, right? They add liquidity. So without shorts, there really isn't the same liquidity as there is, with them. So shorting is something that if you don't know what to do, you definitely want to learn how to do it. There's this sort of fallacy that it's unlimited risk, and in theory it is, but if you have a stop loss, there isn't, right? If you honor a stop loss of 5 or 10%, you still have a similar risk to if you're going long on a stock. So if you're new, don't be scared of shorting stocks. In a down market, you'll be extremely thankful that you short stocks. So I talk about that a little bit more. So yeah, patience is important in all of trading, and especially in a down market, sometimes just being all cash is the best, right? So you don't have any exposure. And you just sit there and you have to be patient. Don't take bad trades. Be like a sniper. Wait for the trades to come to you. And, you can just kind of wait it out. Bear markets on average are much shorter than bull markets. So we've been in a bull market for a decade. But bear markets only last a couple of years usually, historically at least. Of course, that could change any time, right? So number 6 is find the people who are more experienced than you and join their services, learn what they're doing, look at their trade alerts, see what they're doing, try and learn from them. I think people that have had 20 years trading have seen bad markets, have seen good markets. They're like seasoned experts that are more likely to be able to navigate a crazy market than you are by yourself if you're new. So that's definitely an important point, number 6. And then finally, if you don't know how to buy put options, they're one of the best ways to make money in a bear market. Because in a bear market, most of the major indices are falling. So that means big stocks like Apple, Amazon, Tesla, all these big stocks are going to fall usually in a bear market. Now you can't really short those because you need so much capital to do it, but you can buy much lower cost put options to bet against them and to capitalize on the price falling. So if you don't know how to buy put options, definitely check that out. Make sure you're prepared for the next bear market, which may just be around the corner, who knows. And you really want to be able to do that. So learn everything you can about buying puts, and you should be set up for surviving a bear market, at least in theory, right? I think that's all I really have to say about surviving a bear market. I don't think we're quite there yet, but we're definitely at a key point here. If this breaks down here, we could come down here to the 200 moving day. Who knows? Maybe a really deep pullback is what we need in the market, and I think we'll see in the next week or two how this turns out. But hopefully that article's helpful. Definitely do some research on this if you're new and you're worried about the market turning into a bear, and I'll talk to you guys in the next video. Thanks again for listening.